Alright guys, welcome back. My name is Alex. In today's video, we're going to be talking about where the market is heading next. We're going to be talking about the transition from growth into value, how you can actually keep track of this, and we're going to be talking about the earnings and how this is likely to be a temporary peak in the market and why you shouldn't expect such large gains that you've probably been getting recently in these next coming months here. Or this year in 2021. So this video is going to be packed with information for you. So if you do enjoy it, don't forget to drop a like. And if by the end of the video you like the channel, feel free to subscribe. Let's get started. So let's begin with where I believe the market is heading next. I'm not going to BS or beat around the bush. It's going lower. Okay, and let's get this out of the way, guys. I'm not here to offend you, and I wish you the best of luck. I know a lot of people get very defensive when someone says the market's going lower. I'm not trying to attack you, so don't get defensive. That being said, I want to explain my reasoning and show you my side of the story. I think it's good that we have contrarian thinkers that are able to explain their point of view, and that's what I want to do in this video. So why would the market head lower when we have all these incredible earnings? Well, if you're just focused on what's happening now, you're completely forgetting that the market is efficient. It's going to price in what's going to happen in the future. And that's where the average trader or investor goes wrong. They're so focused on what happened today, what's happening this quarter, and what is happening now. But the people who move the markets, the hedge funds, the institutions, are not just focused on now, they're also focusing and positioning for the future. And so right now, they're taking profits, but they're taking profits because of future and forward outlook. U.S. companies are expected to decelerate in growth for Q3 and Q4 here in 2021. And this is going to be the first quarter in 6 quarters where we're actually having a deceleration in growth. Take a look at this. In 2020 Q2, we had negative 32% EPS growth for U.S. companies. Q3 of 2020, we upped that up to negative 8.2%. So this is growth. Okay, obviously it's still negative EPS, but it is growth nonetheless from 32% down to now only negative 8% EPS. Q4, we're moving up to positive EPS growth in 1.4%. Then 2021 begins and we are up 41.9% EPS growth to begin the year. And Q2 which is what we're having just now, 64.4% EPS growth. So 1, 2, 3, 4, 5 straight quarters of EPS growth in the US. And that being said, you can't stay on a hot streak forever, and we are going to see deceleration here for the first time in 5 quarters. Q3, we will have over a negative 50% deceleration, and with that is going to come a deceleration in obviously company growth, right? That's what we're measuring here, and the growth of the S&P 500 and the general market. So once again, when you're so focused and you're thinking here, oh my goodness, are these guys idiots? What are they doing? Apple just had phenomenal earnings. Who would sell that? Who in their right mind would sell that, right? You are focused on the now, which is the greatest earnings in the history of the market right now. You're focused on now, but you're not focused on later. And what you have to consider is these institutions have yearly expectations that they have to meet. They have to outperform the S&P 500. That's the whole point of paying these hedge funds to manage positions, right? And so this is going to be one of the greatest opportunities that they have to collect profits and lock in gains in this crazy bull run that we've had. Am I saying the bull run is over? I am not saying the bull run is over, but I am saying this is a phenomenal time to be collecting profits at the peak of the growth in U.S. companies. Does that make sense? We will never have a quarter to this magnitude until we come out of a war, until we come out of another pandemic or recession again. You will not see a 64% growth in U.S. companies for a long time, unless, once again, something catastrophic hits us, just by surprise in the next couple of years. I mean, it's not going to happen in a long time. I mean, these are record numbers, record earnings growth, and that being said, it is the peak in that growth. So it's the perfect time for these institutions to take profits. That's exactly why you've seen, them sell amazing earnings in Apple, amazing earnings, and Facebook, Amazon, okay? So I hope that clears up your confusion on what the fuck, why are they selling these earnings? Now, I'm sure we have some smart guys going in the comments already saying, oh, it's sell the news, Alex, don't you know, it's sell the news. But, I mean, if it's sell the news, how do you explain all the companies that skyrocket after earnings, buddy? You know, you've always got these geniuses who think they know everything, who think, oh, you know, sell the news, duh, right? So, for example, these same bulls, right? So there's probably bulls who are thinking, you know, Zillow is going to go to the moon. Had they had watched our video, we told you guys it was going to drop, right? But they're probably thinking, haha, Zillow's going to go to the moon. And they're probably, you know, talking on Reddit, Facebook, telling their friends, like, oh, yeah, Zillow's going to the moon. Then guess what happens? They're like, oh, yeah, you know what? They were selling the news. I mean, obviously selling the news, right? So people always switch up. They don't know what the fuck they're talking about. That's why you want to be subscribed to this channel, okay? Because we're going to give you the facts, and we're not going to say, oh, yeah, you know, they sold the news here, and, oh, did you know CVS went up because they had amazing earnings? Blah, blah, blah. Okay, it's bullshit. That being said, there are so many things to cover when it comes to this market, but we're going to go ahead and touch on one more topic to help you understand this market better today, and we will follow up with a part 2 or part 3, so stay subscribed to this channel. But that being said, let's point out some of the technicals here. You can see as the market was soaring to record levels each and every day here, the RSI was diminishing. Now, what is the RSI? It is the relative strength indicator. That being said, as the market got stronger is what everyone thought, right? As the market goes higher, what's actually happening? The strength is going down. That's a divergence, and that's how you can catch this drop. That's how we nailed the drop last Friday, if you watched that video, right? That's how we nailed so many trades, just from this one little simple trick. Now, there's so many tricks here I can point out on this chart, guys, okay? And that's why it really pays to know how to read these charts, okay? So we do have a charts training, but you can watch free videos on YouTube. You can follow this channel, guys. I mean, there's so many things to point out, but that's one great way you could have known that a correction was coming in combination with this deceleration in earnings growth. So if you're new to the market, that's 2 things you've probably learned in this video alone. So my goal is to pack the most valuable and important information in the shortest amount of time, and that's just one technical that we're going to point out in this video. Now, second thing we're going to point out is the head and shoulders that is forming, which is a sign of a momentum slowdown at the peak. So when you have a head and shoulders with a RSI divergence, it's 2 highly bearish factors, and without looking at anything else on this chart, that is a very strong signal to the downside. Now, guys, if you want to break down the technicals of the market, if you want me to do that in further detail, come back tomorrow and we will have a video made for you. We are going to cover so many more points to this market analysis, guys, but I don't want to make this video 40 minutes long, so we're going to keep it split into multiple segments here, but definitely be subscribed so you can catch the other valuable insight I have to share about this market. Okay, that being said, guys, if you enjoyed this video, don't forget to drop a like on this video and make sure you subscribe with the notification bell on. That way you don't miss that video coming out tomorrow. All right, so let's rock and roll. Hopefully you found this video useful, guys. Let me know, what do you see happening here? Do you disagree with some of the points I've went over here? If so, why? Okay, why would you disagree with me? And I don't say that in a judgmental way. I just love to hear your point of view. So my name is Alex, guys. Thank you so much for watching. We will see you on the next video. Have a good one. See you then.